Welcome back to 3 Towers Investing Channel, the #1 channel that gives you the latest in finance, investment, and innovation. In this video, we're going to talk about oil and its impact on some major industries. In order for you to act quickly before prices potentially increase, we will provide you with background information on each of these businesses and several companies within each industry. But before anything else, please don't forget to hit that like button, subscribe, and click that notification bell. So if you've done that, let's get going. Oil prices have soared to levels not seen in 8 years as a result of Russia's invasion of Ukraine and the sanctions imposed. This has happened at a time when US inflation is at 4-decade high. Oil stocks, which are already coming off a year of market-leading gains, benefited tremendously. But now that oil prices have dropped back to under $100 per barrel, they have underperformed significantly over the past week. Think about this and start acting quickly. Number 1. Alternative energy. Fossil fuels are difficult to get rid of, and oil stocks have been dominating the market and industry for the past year. The need for alternate energy sources is strengthened by the rise in oil prices brought on by the Russian invasion. The increase in oil prices have also been advantageous for alternative energy businesses. Although the switch to renewable energy will take some time, you can profit from the current instability by purchasing renewable energy. Additionally, recent events have drawn attention to the world's energy markets, whose equities in particular have been outperforming. Since the start of the war, the American-Israeli solar company Solar Edge has increased by more than 21%. Enphase Energy, a maker of energy technology, has increased 11% over the past month, while Vestas Wind Systems, a maker of Danish wind turbines, has increased 13%. Number 2. Agriculture. Aside from oil, the conflict between Russia and Ukraine and predicted supply constraints are driving up the cost of agricultural products. Oil is utilized as fertilizer for grains and produce, in addition to being used as fuel and a source of heat. Simply put, the rising cost of oil makes it more expensive for farmers to continue growing food. This has caused grocery costs to rise and possibly some share prices as well, along with supply chain problems globally. For instance, the world's top producer of wheat is Russia. According to the Observatory of Economic Complexity, Russia and Ukraine exported more than a quarter of the world's wheat in 2019. Wheat prices jumped to nearly $13 per bushel last week, the highest price ever seen, as the supply was endangered. Consider making an investment in the Tukrium Wheat Fund, or wheat, the biggest wheat ETF in the world, if you want to be exposed to rising grain prices. Since Russia invaded Ukraine on February 24th, the price has decreased by 39%. Another item for which Russia is the top exporter is fertilizer stocks, so you might want to take a look at those as well. The share prices of businesses that produce and sell fertilizers have increased dramatically in recent weeks. One of these is Nutrien, the biggest fertilizer manufacturer in the world, whose stock price increased by up to 32% in the weeks following Russia's invasion of Ukraine. Up until the end of 2022, Russia has just placed export restrictions on over 200 products. This includes wheat, fertilizer, and other agricultural goods, since you may anticipate that stocks in these industries will continue to be volatile for the foreseeable future. Number 3. Timber. The restriction on exports to Russia extends to timber, another major commodity from the country. Around 15 million cubic meters of logs were exported from Russia in 2020, making up about 12% of all round wood that was marketed internationally. For comparison, the US imports around 10% of its hardwood plywood from Russia. Even if you haven't been involved in North America's irrational housing market, you've probably heard about how costly lumber has become and how this has increased the cost of new buildings. Lumber prices have really increased by almost quadrupled since the end of 2022. Considering how much lumber Russia exports, a prohibition ought to have an effect on the world market. As a matter of fact, investing in lumber companies may allow you to benefit from rising wood costs. In light of the rising price of timber, take a look at these companies and ETFs. First, UFP Industries. UFP provides lumber to the manufactured housing industry, and its stock price has increased by 20% in the last year. UFP Industries has been a solid long-term performer, growing 159% over the past 5 years, even when lumber prices inevitably decline. Second, West Fraser Timber. This Canadian forestry company's stock price has increased by 40% in the last year. Being one of the biggest lumber producers in North America, the business should stand to gain from Russia's embargo on timber exports. Over the past 5 years, the share price has increased by 122%. The Global Timber and Forestry ETF from iShare is the last. If you want to gain extensive exposure to the timber industry, take this into account. It has increased by almost 5% over the past year and by 57% over the last 5 years. Number 4. Metals. As the conflict in Ukraine escalates, prices for palladium, nickel, and aluminum have all been rising significantly lately. With a 40% market share, Russia is the biggest palladium supplier in the world. Additionally, the nation supplies 10% of the world's nickel and 6% of its aluminum. Palladium prices increased 26% to 10-month highs when Russia invaded, while nickel prices soared 85% to almost $48,000 per ton. Russia's invasion of Ukraine has already caused reactions in the metal markets. However, persistent geopolitical unrest and trade restrictions against Russian metal producers could further restrain the markets of aluminum, copper, and nickel. In light of the rising volatility, you might want to think about investing to Sibanye-Stillwater, Alcoa, and Freeport-McMoRan. Alcoa is the largest U.S. producer of aluminum. Freeport-McMoRan is a mining firm with a focus on copper. Sibanye-Stillwater is a precious metals mining business with a wide portfolio of the platinum group metals, including palladium. Number 5. Electric Vehicles. By no means is Russia the biggest market for electric automobiles. In actuality, there were just 13,000 registered EVs in the nation in 2021. In contrast, China registered 3.4 million EVs, while the US registered 700,000 EVs in 2021. However, this booming industry will probably gain from the rising oil and gas prices, which sadly seem destined to remain high. Due to more accessible, more inexpensive options, EV adoption has been on the rise recently. Additionally, a Consumer Reports survey reveals that EV owners pay much less for maintenance and repairs. Consumers may intensify this shift if they think that oil and gas costs will continue to rise, which should benefit EV stocks. The EV market is still dominated by Tesla. Despite the stock's recent decline, it still has a promising future. This is particularly true as the business increases production throughout its global plans and keeps bringing down consumer expenses. You should also think about how established automakers will profit from the expanding EV market. In order to develop their own EVs and take a piece of the expanding market, General Motors and Ford will continue to invest billions of dollars over the next years. You could wish to look into EV startups like Rivian or Fisker despite the greater risk. If these businesses succeeded, a big if, they might benefit the most. Investing in these stocks today might result in returns of 100% or more if they meet their predicted goals. Now tell me, to protect your investment and portfolio, what's gonna be your plan? Let me know what you think in the comments section below. Don't forget to share this video and subscribe. This is your 3 Towers Investing channel. Thank you and see you in the next video.